All right, guys. So let's quickly look at Nasdaq. Starting off with Nasdaq first. Well, there is no stopping Nasdaq right now, right? Nasdaq is basically going up and up. We have now got a change in state of delivery on Nas, right over here. So the change in state of delivery is confirmed. We are getting back-to-back fair value gaps as of now. Hopefully, this will form, and if it does form, we are quite clear to know that the targets of the head and shoulder failure, which I have been talking about, obviously, even though it is out of the way now, it's still in the picture. That 200 to 50% will be hit, right? That will bring us to 32,700, and onwards it's around 34,000, 35,000. Now that 34,000, 35,000 is also the area that I'm targeting for the end of year target. So Nasdaq is really playing very well. If this weekly candle closes any more bullish than it already is, we'll also have a change in state of delivery on the weekly time frame. Now, obviously, this is not going to help us trade in any way on the shorter time frame or intraday levels. But what it gives us is a bias. Any sort of retracement becomes a buying opportunity for us to the ones until we achieve the targets. Now, looking at the daily chart again, what I want to see is that these relatively equal highs are the first draw on liquidity. Now, if this draw on liquidity is met today, I would expect the remaining part of the week to be accumulative or bearish, right? I'm not going to say that the market will keep pushing into higher prices on Thursday and Friday. It will most likely be an accumulation day, more or less, or a downtrend towards these fair value gaps that are forming. Now, if Thursday is also bullish and we start pushing towards this 100%, I would expect Friday to be a TGIF for sure. So just play the market accordingly. Just make sure that you understand the market will basically play like that for the next couple of days. Looking at the 4 hourly chart, we had back-to-back fair value gaps just now, which is above the previous liquidity. Guys, this is very, very crucial, right? If the back-to-back fair value gaps are forming when we are achieving liquidity, that's another story. But once we are above a liquidity area, back-to-back fair value gaps are a good way to target where the market really wants to head towards. And as we can see, that 100% lines up perfectly with the 200% of the back-to-back fair value gap on the 4 hourly. The 400% lines up perfectly with the 250% of the daily back-to-back fair value gap that we just saw. So we need to be open towards the market structure to be stay bullish. Any sort of retracement, as I just said, is a buying opportunity right now. So please remember that. What I expect from the market today is again bullishness, but how does that bullishness, what will it look like? Now, clear answer is how do we react above this high? Now, this is the most important part right now for the market. If in the next 42 minutes we are showing bullish reaction and we are trying to push the market towards the upside, I would very well stay bullish and try to find a long trade from here. If by any chance we start going towards the downside, right, we start pushing towards lower prices, we have so many fair value gaps from where we can bounce. But which is the most important and the most crucial one? The simple answer is draw the range and let the range tell you where the market might want to head towards. So if we draw the range, we can see this is the fair value gap that the market might want to push into. But if this happens again, obviously, if this happens today, this whole candle will basically move down here, and our whole perspective of the market on how it's going to move higher is going to change. So I want to put my money that this high will sustain, right? We might wick up and down, but this high might sustain and we will push out of this with bullish intent. Now looking at the 15-minute time frame quickly, 15-minute, obviously there was a nice retest of this fair value gap and a good push out of it, right? Nice retest and a good push out. We are currently trading above New York PM high. So that means as of now, we are planning to go and take all that liquidity that's lying above us. For us to be able to sustain again that New York PM high or that 1 hourly high needs to stay. It needs to show strength. And how will it show strength is that if we can basically go back inside of this fair value gap, which we are doing right now, push out of it with power, that will give me confidence that this market wants to head higher. If we are not able to do that, it will give me I'll not be kind of sure what the market really wants to do. And in terms of bearish trades, I will most likely sit out of the market today if there is no bullish trend. Every time the market retraces and goes down into some sort of liquidity, I'm going to buy and I'm going to give it like 1 or 2 tries to basically make up some money. Otherwise, I'm happy to sit out of the market. I don't want to trade towards the downside. Now, looking at the 5 minute chart, what we have currently is that if the next candle is bearish, we'll have a change in state of delivery towards the downside, and that is where the market will basically turn, right? That is where the market will show its hand. So keep an eye on that. If the market shows its hand towards the downside, you know what to do. Overall, we have a back-to-back fair value gap that has swept liquidity on this. We have achieved the 200% of that. 450% is around 30,000. Psychological level 30,000. It's going to take some doing to break that, and let's see what the market offers us, and let's see what the market gives us overall when we are close to achieving that. Right now, I just want to quickly go down to gold as well, because gold has been accumulating, and I feel it's kind of getting in the area where it might push out and it might give you a nice trade over here. Right, we had a nice bullish candle which is forming today. Now, if this candle is able to close above these highs, I'm planning a long trade on gold. I know most of the time when we are looking at the market, we are thinking, I don't want to long in a downtrend. But in this case, gold has been in a weird structure and a very, very strong accumulation on the higher time frame. Right, even though the risk on assets are pushing right now, S&P is at all time high, YM is at all time high, Nasdaq is trying to push for all time highs. Gold could very well pump into the impulse of this downtrend, right? So that could be a good opportunity for me to kind of trade gold, which I normally don't do, right? To trade gold to take it back into this order block right over here. So mark this area. What you're looking for is a change in state of delivery, and you might want to pick up a trade from here, somewhere wherever the candle closes, putting your stops underneath this candle, the daily candle, so that you're not exposing yourself too much to the market, and just aiming for the top of this order block. So that would be the trade on gold that I'll be looking at as well. But this is a swing trade. This is not really, this is not an intraday trade. This is going to be a swing trade. So just make sure you're playing it accordingly, right? And yeah, that's about it from me. With that, I would basically